Are you feeling the impact of the great credit unwind? The economy has been going through some significant changes lately, and it can be tough to navigate through all of the news and data. But don't worry, thankfully you got your money GPS to break it all down for you in an easy to digest format. I'm gonna bring you what you need to know. I've got the charts and the articles right here, and we're gonna go through it and make it so easy for everybody. You came here for the truth, so let me unveil that for you. Here we have it. Panic around Deutsche Bank being the next Credit Suisse spreads. You said no, it wouldn't be possible. They said no, it's never gonna happen. But you've seen one after the other, and here we go today. Now the governments, the FDIC, insurance, everybody is panicking right now, and they're all gonna make their statements. They're all gonna come out there and say, look, this is what we've got to do. We gotta, print money. We gotta do loans. We gotta do all these things. That's coming out right now. And so we have these banking concerns, and you could see that along with these recent cash withdrawals that have been going on, you've got short sellers making bets against office owners. Why? Because they know that these buildings are not going to be needed as much. They're going to be cutting costs. You have commercial mortgage-backed securities that have become a concern. Of course, this is very important. You look at the assurances from the SVB CEO saying there's no cause for concern. What happened there? This all happened in a time we were told do not panic. And that's the time you probably should be panicking, right? Look, hedge funds are said to be targeting Deutsche Bank right now. They are the next Credit Suisse? Well, according to Jim Cramer, that is really not the case. You've got small banks that are a worry right now because they're not as liquid as the big banks, and a lot of people are shifting their funds out. Where are they shifting it to? Let's talk about that here. So you could see as the European banking crisis deepens, analysts are warning against drawing too many comparisons. Deutsche Bank, which we've been looking at a long time on this channel, has been a focus. They have mass derivatives exposure, which doesn't necessarily mean that that's a crisis for them, but it means that they're tied in, they're interconnected. And if Deutsche Bank has a problem, a lot of other banks have a problem too. When a full-blown crisis has erupted, lecturing people not to panic rarely helps. Sometimes it even hurts. Well, that's what the German chancellor had done. Look, it's a profitable bank. In fact, he said a very profitable bank. There's no cause for any kind of concern. Do we trust the leaders in charge? Do we trust the bankers? Do we trust all these people? I'll leave that to you. Okay. It's a clear case of the market selling first and ask questions later. Credit default swaps. What's a credit default swap? Essentially like insurance or a bet against a company going bankrupt or having problems paying back their debt. And you could see that these have increased quite a bit. There's no question about that. And it's hard to look at this because the scale is so thrown off by Credit Suisse. But all of the banks basically have become more risky. That's all you need to know. They've all become more risky, and this is everywhere around the world because of all of this. I mean, we're talking about Switzerland. Swiss banks. Wow, the Swiss banks. We'll look at any movie 20 years ago. Swiss banks, ooh, that's secretive. That's safe. But now today, they're going bankrupt. Short sellers step up bets against office owners on bank turmoil. And not just for that reason, of course, all of these things. CMBX declines. I'll show you more about that here. Office landlords have much higher leverage than other REITs. So these CMBX things are something I was talking about a little while back because the commercial mortgage-backed securities are definitely a concern. Look, if everybody's working from home and if you don't need all that commercial real estate, what happens to this? Well, there are these think about mortgage-backed securities in a sense that we had like 2007, 2008. They take all this debt and they pile it all together in one. But what happens when a lot of that office retail, office retail, whatever the case may be, that depends on the type of commercial mortgage-backed security, suddenly that stuff's not needed anymore. Oh, well then you've got a problem because the landlords aren't paying the renter's not paying, the landlord's not paying, nobody's paying. You've got a problem on the underlying debt. And that could run into several issues. That's part of what we're seeing right here and now. So if I look at this, it says money managers stepped up their bearish bets against office landlords, wagering that the US regional banking crisis will slash the availability of credit to property owners that were already suffering from 2020 and rising interest rates. So that becomes an issue. You see this? Because during any crisis, no matter what, you have a tightening of credit. And if there's a tightening of credit, generally the expansion, the growth isn't there. So we saw that during 2008, we saw it briefly during 2020, and now again that's occurring. Anytime you have a rising interest rates or a banking problem, financial crisis problem, that's what you get. We're seeing that here and now today. And of course, this is an issue. This is an issue for a lot of people because it has that knock-on or domino effect. Let's take a more of a deep dive right here. I want to talk about a few things, in fact, but let me just show you that we have US bank deposits declining by the most in nearly a year. And you've seen the articles about this, you know about it. I think for a lot of people, they are generally concerned because they don't know what to expect. Hey, suddenly is my money, going to be gone? Well, let's look at that. You could see the deposits declined by more than $98 billion in the week ending March 15th. I'll show you updates on that. Looking at this, small banks hit by massive cash withdrawals. Americans have withdrawn nearly $120 billion in deposits from the US small banks in a week marked by the collapse of SVB. So much has happened over that little, like such a short period of time. Basically, people are saying, I'm not going to trust it. I'm not going to be dealing with the conditions. Like, even if you're going to get your money back, this is what people don't understand. Even if the FDIC would pay you back, you lost, let's just say you had $1 million in the bank, all of that was wiped out because of a concern, but don't worry, the FDIC will pay you back. How long are they going to take to pay you back? What happens? And where are you going to put that money when they're going to give you the money back? Are you going to just keep it in that same account again? Or are you going to take it and you're going to put it into your mattress? Do you see the point here? People don't think about these things. Like, yeah, it's FDIC insured. I'm not worrying about it. I'm buying Tesla stock. Like, that's the ignorant behavior that most people have. Most people, even in the financial industry. Man, I worked in these situations where I'm talking with these people who manage, a lot of money. Let's just say that. And I've had these conversations with them and I overhear a lot of their conversations, and it's bad. And I feel bad for the clients. A lot of these people in the case I'm talking about here were elderly clients where the company would just manage everything for them. Whatever they needed in terms of financial, they would handle it. And a lot of these people were just completely oblivious. They're working, they don't even know what's going on. They don't know what's going on. That's why you're seeing gold right now had risen quite a bit. It's because of the concern there, for good reason. Because, hey, I don't know what to do. I'm going to put my money in gold. That's paper gold, by the way. Physical gold always in high demand, it seems. Black swan funds have a moment as investors hedge market doom. This is part of it, and they're just saying that some of the analysts are arguing that the current flight to safety is about the next recession, not the banks. I'll show you that in just a second. Amid all the bank failures, Bitcoin right now is emerging as a North Star for some investors who are looking for stability and predictability. Can you believe that? Bitcoin, the one that they were saying is such a concern, is such, a volatile thing that we can't get in this. And it's been much more stable than the bond market, that's for sure. Wild to see these changes, isn't it? Bank crisis fears drive renewed interest in hedging tail risks. Investors take precaution against volatility surge months away. And you can look at the data behind that. I think it's just important to see what investors are doing with their money. And they're going into different things. They're going into gold, they're going into safer assets and investments, and something like a black swan fund, which kind of takes a big risk on, something bad happening. Those are seeing a lot of interest lately. US mulls more support for banks while giving First Republic time. Changes to the Fed's liquidity program could be made to help the bank. Even without that, officials are letting it continue to deal hunt. So this is still happening. This company here, which the stock just got absolutely annihilated, they're basically just saying, no, we don't have to take it over. We're going to let it go. I'm interested to see what happens. Eventually, I don't think banks are going to collapse. This is nonsense of a collapse, thinking that, okay, it's collapsing, it's just going to cease to exist. That rarely ever happens. But what does happen is it basically will collapse into itself, and then another company will come and take it over a lot of times. That other company, when it takes it over, it basically goes through and says, we don't need all of this, you're gone. And so that means jobs, that means infrastructure, that means, the real estate, gone. So the assets may be reclaimed, and if there's a depositor, if there's an investor, they might be okay. But it doesn't mean that there's not scorched earth along the way. And that's just ignorant. That's just people who haven't read history. That's just people that want to convince you everything's okay. Hey, buy Tesla stock. And you can do that. That's fine. But we shouldn't be ignorant. There's nothing, there's nothing good about ignorance. Ignorance is bliss. They maybe in 1984. Okay, you're looking at officials at the FSOC, that's the Financial Stability Oversight Council, meeting in a closed session on Friday, insisted that the system remains sound and resilient. People were asking, what was going on in that, and this is part of it. The flight to safety is about the next recession, not banks. Investors seek reliable sectors like food, pharma, and telecoms. Banks drop more on earnings woes as the financial system fears. This was from the 25th, this article. It ain't pretty out there. The bank profitability crisis has become a solvency crisis and will act as a catalyst for substantial tightening impulse in financial conditions. All of these things come together. Really important stuff. And this is what I was saying about Bitcoin. Look at it. When things were coming down, SVB, Silvergate, for all those banks, Bitcoin was going up. So unusual. Now, at the time of this recording, it's at about 28,000, off its peak of 29,000 in this recent rally. But still, we have seen it become unusually, in my opinion, there's been some growth there. Now, it could be coming out of the other, altcoins and going into Bitcoin as well. It could be just other things moving out of, let's say, cash or money markets going into Bitcoin. That could be the case as well, but that means probably people have their money on the exchanges, which have we learned nothing? Fed's preferred inflation gauge seen staying elevated. Okay, and that's where really I wanted to finish off, just talking about inflation in the way it's gone, interest rates remaining high. What do you think the central banks, in this case the Federal Reserve, have to do? They have to keep this high, or if they start to cut, it's a bank crisis, they cut interest rates and inflation goes higher. You've got to deal with that problem, and this is such a big concern. I hope more people will pay attention. That's the way it goes. So all of this together, bank crisis going on, very concerning for your money, for the safety of basically everything you have. And I'd be really concerned. Number one, we got to hold real assets. We have to have real things. We got to diversify where we have our income, because we don't know what's going to happen to the economy around us. If you live in a place that, just be honest with it, the jobs are not moving in, they're likely stagnant or moving out, that's a big concern as well. I'm going to do an entire video about that. In fact, stay tuned. Education Week coming up in early April. I'll bring that to you. It's going to be 1 week of just educational videos, financial education, no news. I'm just going to bring you the data you need to know if you aren't already going to become an insider, because that's my way to communicate with you directly. That's the way we got to do this, okay? I'm spending a lot of money every month to have this insiders set up. It might be right here if you can see that. If not, themoneygps.com, scroll down to the bottom, get on the list. I'll email you the video today, as well as I try to make just one point in there, keep it real short. It's not spam, it's not garbage, none of that silliness. A lot of people have been signing up to that. It is free, of course, themoneygps.com, scroll down. I'll see you there. Take care.